Hey, what's up, everybody? It is Tuesday, October 6th. Here's a question I have for you. How's all those headline traders doing, huh? Another wild swing from yesterday to today, down again. So yesterday, the headline traders, Friday, the headline traders heard that Trump was going in the hospital because he had COVID. So they went short, market went down. Then yesterday, they had to reverse those positions. They pushed the market up over 400 points and was looking good today. And then Trump came out late in the day and said, you know what? That's it with the stimulus. We're going to wait till after the election. And guess what? The market dropped again. I've been telling you guys, headline trading is not the way to go. If you think that's a thing, you're just going to get chopped up to pieces. Fools are headline traders. Can't make money doing that. You got to have an understanding of basic economic conditions. You have to position yourself and you have to ride through these crazy swings that are triggered by basically zombies chasing news in and out, up and down. It's just not the way to do things. Absolutely not the way to do things. And if you're doing it that way, you're on the path to ruin. You got to understand basic conditions. That drives everything. And what drives basic conditions? That's all the fiscal stuff, the MMT stuff that I talk about, the core of my analysis. So, we're in a new fiscal year. Spending is already up over last year. We don't have a lot of data. There's 3 data points. But I don't expect any kind of a cutback in spending for reasons that I've been speaking about for the past week or so, maybe longer. The pullback is a buy. We're starting to actually see now some Wall Street firms, Goldman Sachs in particular, talking about a major bullish environment for the market, for the economy, if it's a Democratic victory. Now, I don't know. What I've been saying is that we're not going to see any changes in policy, at least until we see who gets elected and how it plays out with the Senate and what policies are proposed. I don't try to jump ahead of policy. I wait for policy to be proposed and then voted on, the final, result, and then we can determine what is going to happen. But right now, nothing's going to change. We have record fiscal, and I know it's a disappointment to the market and to the zombies when Trump said, hey, stop negotiating until after the election. And by the way, I think that's a ploy on his part to kind of entice people to vote for him. He's holding out that carrot out there saying, hey, you know what? If you vote for me, there's going to be this big, juicy, incredible stimulus package after I win. But implied in his comment is like, here's the carrot, you got to vote for me first. Maybe yes, maybe no. I don't know. All I know is right now, there's a sufficient amount of stimulus in the economy. I've been saying that. Bank deposits at record high levels. You need a catalyst. Look, I'm looking at the data every single day. Year over year, we're already up over where we were last year. Another thing that I saw is tax flows are improving as well. Corporation income tax flows up year over year, and employment and withholding tax flows up year over year. So that has been a very, I think that's a positive development right there. So the trends are positive. You got to buy into this dip. I believe we're going to go higher. Same kind of knee-jerk reaction we saw in the currency markets where they sold off the currencies, they bought the dollar. That's, again, the classic, flight to safety. We see this every time, risk on, risk off. Whenever it's risk off, what are they doing, right? They're buying the dollar. They sold gold. I think I mentioned yesterday that producers were sellers in gold, so the upper end of the price range is capped. I mean, if I didn't say it yesterday, it was in my report. All my subscribers got that. But you still got to be buying these dips. The overall fundamentals for gold still remain bullish. We got the API oil inventory report that came out earlier. We got a small build in crude inventories. I think that was a little bit of a surprise, but we had a draw in gasoline and a draw in distillate, and we'll see the EIA inventories tomorrow. And in particular, got to look at what's happening with demand. Demand's a key, all right, because that's also kind of a barometer of what's going on with the economy. So that's the update. Remember, you headline traders, you're going nowhere. I mean, don't kill the messenger. That's just the way it is. You can't do it that way. You don't, that's guessing. That's just rolling the dice. That's a bunch of sheep going one way, one day, another direction the next day, then back the other way. You're getting chopped up. You're getting destroyed. You're not going to be able to make money that way. You want to make money. You want to make big money. You have to understand basic conditions. And the only way to do that is to have, through the lens of MMT perspective. The flows are everything. That's what I do. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. See you tomorrow. Bye-bye.